Tuesday, September 21st, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why I think there is a big probability, unfortunately, that there will be blackouts, there will be power outages this winter in the UK. And that's despite Kwasi Kwarteng's famous last words. What were his famous last words, in my opinion? Well, he said there's no question of lights going out this winter in the UK. Kwasi Kwarteng is the UK business secretary. He's also a PhD historian from Cambridge University. He's an MP, of course, now, but I've got one of his books. I've recommended one of his books entitled War and Gold, a 500-year history of empires, adventures, and debt. Highly recommended, by the way. But it seems like even though he has a PhD in history, he's learned very little about economic history. Of course, George Santayana, the Spanish philosopher, is credited with saying, those who cannot remember the past are condemned to repeat it. Of course, Ecclesiastes 1:9 says as well, what has been will be again. What has been done will be done again. There's nothing new under the sun. And I think it's going to be one of those famous last words, just like Ben Bernanke, who said that the subprime mortgage crisis was contained, just like Janet Yellen, who said that, I think in 2019 or 2018, that we'd never see another financial crisis in her lifetime. It's also a little bit like Bill Clinton saying, I did not have, you know what, with that woman. Famous last words. I think it's going to come home to haunt Kwasi Kwarteng, who is the business secretary. And I've been reading up a little more on the energy crisis and natural gas prices in the UK. And what I found out is that it's not the current government that started putting price caps on energy prices. It was in 2018 under Theresa May. And yesterday I was reading this article in the Telegraph, and it says, price cap that protects consumers must go. Energy companies tell business secretary. Suppliers insist restriction has to be abolished as gas price soars to record high, but Kwasi Kwarteng holds firm. So we're going to go through why this policy of price control actually creates the opposite effect that politicians wanted to create it. Let's go quickly through this article here. It says, business secretary was on Monday night under growing pressure from energy companies to scrap the price cap as UK wholesale price of natural gas soared to a record high. Kwasi Kwarteng insisted the cap will remain in place, I quote him there, assuring consumers that their bills would not rise as a result of the gas crisis. But the Telegraph understands the issue was raised by energy firms in the meeting with Kwasi Kwarteng as they demanded that he abolish or raise the cap. I think he should abolish it. You might say, well, you're heartless. You want consumers to pay a high price. No, what's happening is that you cap the price of anything. You make it uneconomical for the producers and the suppliers to supply it to the public. What will happen, and we're seeing already happen now in the UK, is that a lot of suppliers are going out of business. And when they go out of business, there's a danger that you're going to get less supply. Less supply means higher prices. And that has been the case throughout history. So it says in the article here that Theresa May, the former prime minister, her government put a price cap. It says here the cap was introduced in 2018 by Theresa May's government to protect consumers following accusations of profiteering by energy companies and limit the rates that suppliers can charge for their default tariffs. Many companies have long argued the measure makes it difficult to trade profitably. That's right. Business are not in business to break even or lose money, for that matter. They're in business to make a profit. If you can't make a profit, what's the point? That's the whole motive behind the free market. You might want to call it capitalism. I guess that is capitalism as well. So here we have supposedly free market government as per the Tories, represented by the Tories or conservatives, and they are instituting, of course, stupid policy. They're instituting yes, government interventionist policy. And I don't think it matters which political party, because there's an example from the early 70s. And I'm going to go to an example from much earlier than the early 70s, but it was Richard Nixon. It says here, Nixon issued Executive Order 11615, pursuant to the Economic Stabilization Act of 1970, imposing a 90-day freeze on wages and prices in order to counter inflation. This was the first time the U.S. government had enacted wage and price controls since World War II. What did this price freeze do eventually in the 1970s? Well, it created stagflation. It resulted in even higher prices, unemployment, companies going out of business. So unfortunately, President Nixon, being a politician and a lawyer, didn't know that the best way to contain inflation was to allow the Federal Reserve to raise rates, was for the government to spend less, but he didn't want to do that. He wanted to have his cake and eat it. He wanted to keep consumers happy, and it actually had the opposite impact. And I think it's going to be the same, unfortunately, this winter, unless they totally scrap this price cap. And even then, I think it will be too late, because from what I'm reading here, we could see dozens of companies go bust, these independent suppliers. I think right now there's 55 of them. And from what I've read here is that we could have less than 10 very soon. So unfortunately, nowadays, it seems like every economist, and I know Mr. Kwarteng is not an economist, he's a historian, but I would say he has probably a good background in economics. He wrote a really good book to do with history, war and gold and debt. So he does have some idea of how economies function. He knows the history as well of the Bretton Woods and the gold standard and the Nixon shock, from what I read in this book. But he seems to be trying to defend more his votes than anything, trying to keep the consumer happy, and he's going to actually create an even bigger problem by keeping price caps. So I reverted back to one of my favorite books that I've been referring to for many years here on this channel, and it's called Fiat Money, Inflation in France, How It Came, What It Brought, and How It Ended. This is, of course, during the revolutionary period around 1790 to 1796, when France embarked on an experiment of printing money, just like we've been doing for decades in the West, in the UK, and especially since March last year. And Andrew Dixon White, the author, he was one of the founders of Cornell University. He wrote this book back in 1912, but it's timeless because it just shows how when legislators or governments and politicians try to mess with the market mechanism, it usually has disastrous consequences and impacts as well. But I'm going here to page 40 to talk about something called the maximum that they instituted in France during that period. And you can tell already by the meaning of the word, the maximum, right? and it's to do with prices. So let's quickly go through this. The third outgrowth of the vast issue of fiat money was the maximum. As far back as November 1792, the terrorist associate of Robespierre, Saint Just, in view of the steady rise in prices of the necessaries of life, had proposed a scheme by which these prices should be established by law. So there you go. We have a maximum in energy prices. It's called a price cap. They haven't called it a maximum. At a rate proportionate to the wages of the working classes. This plan lingered in men's minds, taking shape in various resolutions and decrees until the whole culminated on September 29, 1793, in the law of the maximum. While all this legislation was high-handed, it was not careless. Even statesmen of the greatest strength, having once been drawn into this flood, were borne on into excesses which, a little earlier, would have appalled them. Committees of experts were appointed to study the whole subject of prices, and at last there were adopted the great four rules, which seemed to statesmen of that time a masterly solution to the whole difficulty. That's Theresa May. Well, we put price caps on energy prices. We'll protect consumers. Everything will be fine. Well, I would say we're suffering the consequences of our policies 3 years later. So what's this first of these four rules? It says the price of each article of necessity was to be fixed at 1 1/3 its price since 1970. Secondly, all transportation was to be added at a fixed rate per league. Thirdly, 5% was to be added for the profit of the wholesaler. Fourthly, 10% was to be added for the profit of the retailer. Nothing could look more reasonable. Great was the jubilation. The report was presented and supported by Barrère, the tiger monkey, then in all the glory of his great orations, now best known for his portrait of Macaulay. Nothing could withstand Barrère's eloquence. He insisted that France had been suffering from a monarchical commerce which only sought wealth, while what she needed and what she was now to receive was a republican commerce, a commerce of moderate profits and virtuous. He exulted in the fact that France alone enjoys such a commerce, that it exists in no other nation. He poured contempt over political economy as that science which quacks have corrupted, which pedants have obscured, and which academicians have depreciated. France, he said, has something better, and he declared in conclusion, the needs of the people will no longer be spied upon in order that the commercial classes may arbitrarily take advantage. So this is similar to what we're told these days, that these companies are making too much profit, that they're greedy, so they have to put these price caps. So here we go. The first result of the maximum was that every means was taken to evade the fixed price imposed, and the farmers brought in as little produce as they possibly could. Shortages. This increased the scarcity, and the people of the large cities were put on an allowance rationing. Tickets were issued authorizing the bearer to obtain at the official prices a certain amount of bread or sugar or soap or woods or coal to cover immediate necessities. But it was found that the maximum, with its divinely revealed four rules, could not be made to work well, even by the shrewdest devices. In the greater part of France, it could not be enforced. As to merchandise of foreign origin, or merchandise into which any foreign product entered, the war had raised it far above the price allowed under the first rule, namely the price of 1790 and an addition of 1/3. Shopkeepers, therefore, could not sell such goods without ruin. The result, that very many went out of business, and the remainder forced buyers to pay enormous charges under the very natural excuse that the seller risked his life in trading at all. That this excuse was valid is easily seen by the daily lists of those condemned to the guillotine, in which not infrequently figure the names of men charged with violating the maximum laws. Manufacturers were very generally crippled and frequently destroyed, and agriculture was fearfully depressed. So I'll stop at that. Just wanted to show you the principle of what happens when you put price control, and it was happening in France back then. Shopkeepers, as it said here, went out of business. Manufacturers were crippled and frequently destroyed, out of business again. Same thing for the gas suppliers today. So as you can see, nothing changes. Over 200 years later, Kwasi Kwarteng and the politicians in the UK are making the same mistakes. Of course, the carbon net zero, carbon neutrality policy is driving this as well. I'm going to put a link to a video I made about this a few weeks ago, and I was forecasting these problems already. And I was forecasting, of course, the problems with the UK economy back in July. So the only thing we can do is hope that it doesn't get worse. But I'm not too encouraged by the policy of price capping. You saw how the maximum worked really well in France, not how it worked really well in the 1970s under President Nixon, not. So all I can say is I wish Kwasi Kwarteng would do a little more digging into the history. He is a PhD historian, but it looks like right now he's leaning on politics and he's not doing the right thing. So with that, let's quickly look at where the markets are this morning. It's 20 to 9 a.m. London time. Yesterday, the stock markets were hit quite hard. The Evergrande situation is still out there. There's other things as well that could be a problem for the markets, like the budget impasse. I saw that the Democrats made an ultimatum to the Republicans yesterday about the debt ceiling, about their package, their budget package. And I don't think it's going to end up well. So there's a lot of problems out there. We could find many reasons for the big drop yesterday. I think the Dow dropped just over 600 points. Yeah, it dropped 614 points, just under 2%. It was down as much as 900 points, almost 1,000 points. And then it rallied towards the close. The Hang Seng yesterday in Hong Kong was down about 800 points. Today, it was down over 200 points, but right now I see that it's stabilizing. It's up about 135. And the encouraging thing yesterday was that I thought the precious metals did relatively well compared to all the other asset classes. Yes, silver was down, of course, when the US came in, but it wasn't down that much. And gold was up quite a bit. It was up about $10, despite the fact that we saw a big drop in the stock market. Right now, we're at 1760, down just over $3. The range has been 1757 to 1766. Silver is up 8 cents at 22.34. And that's the other thing about the maximum. And the reason for this maximum is not really to help consumers, but to help the fiat currencies. It's the policy of trying to cap the price of gold and silver by the powers, monetary powers that be. That's a kind of a price cap, a maximum. And you've seen from history that it creates shortages and it creates eventually even higher prices. So that's all I can say about the precious metals right now. So the stock market indices are higher this morning. The Dow future is up just over 1%, or 380 points. The NASDAQ is up 0.9% or 136 points. And the S&P 500 is up 42, just about 1% higher. The FTSE is up 62 points or 0.88% at 69.70. So now let's look at the currencies, the Forex report. We got cable or sterling up 0.2% at 136.84. The euro is pretty much unchanged, 117.22. The dollar is up 0.25% versus the yen at 109.66. The dollar is down 0.1% versus the Chinese yuan at 647.70. And let's have a look at the Aussie dollar. Aussie dollar is up 0.33% at 72.73. The dollar is down 0.5% versus the Canadian dollar at 127.58. And the New Zealand dollar is up 0.1 at 70.33. To the general commodities, WTI crude is up 1%, just below 71. High-grade copper is up 0.2% at 412.26. Natural gas price, the future, natural gas future is down 0.4%, just below $5. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.